Good evening. Welcome to Officer Adda 247. Today, we will be talking about the principles and practices of banking subject under the target series. When we talk about PPB, it is more inclined towards the real life banking. And when we specifically move to module B, it has a good amount of, you can say, portion which dedicatedly talks about the loans and advances. So for unit number 28, which we will be covering today, the most important topic, that is NPA classification. How the classification is done, what do we mean by NPA, and how we can manage. This entire unit is about that. But when we talk about the previous chapters, the unit number 1 till unit number 27, if you have not watched all those videos yet, highly recommended that once you complete this video, jump on to the unit number 1 and try to complete the remaining videos as soon as possible, because via target series our aim is to tell you the most important topic of a particular chapter. Okay, so let's start our discussion of the NPA. When we talk about NPA, that is non performing asset, we talk about one thing only, that is the asset which has been created thanks to the credit dispersal. Fine, the asset of the bank which has been disbursed to a particular individual or the business entity, it is now non performing. For what? For the bank, it is non performing for the bank. And when we talk about non performing, how you can measure it? Because bank has provided the credit to the customer. Now not only the principal amount is being recovered, not being recovered, but along with that, rate of interest, which was the profit of the bank, is not being delivered to the banking channels. That is why we term such loans where not only the principal but no interest is being repaid to the quantum what was imagined by the bank while lending the particular credit. Okay, so when we talk about the background from where the classification or the importance of classifying a particular loan account into NPA started, let's see one by one what the book says here. In line with the international practices and as per the recommendations made by Committee on Financial System, which was headed by Mr. Narasimham, the RBI introduced in a phased manner prudential norms. Now this term, that is prudential norm, this term, you must know that what is the exact meaning of this term, because only after the introduction of prudential norms, we, the bankers, we are able to know for sure that whether a particular loan account is turning into a bad asset or not. So these norms were prescribed by the RBI for income recognition. What is the income recognition parameter there? Then asset classification. What type of asset is there, and we are classifying it on various basis, and provisioning for the advances portfolio of the bank. So keep this thing in mind. Whenever I talk about the prudential norms, they are for the advances. That is the first thing which we must remember, whatever advances the bank has delivered. Secondly, the most important part of prudential norms is IRAC norm, or IRAC rating also you can say, because nowadays banks provide some rating, right, from 0 to 9. And this IR in IRAC stands for income recognition. And when I talk about the AC, it stands for asset classification. As we move further in this chapter, you will come to know that what do we mean exactly by the IRAC norms. Okay, so if you have not subscribed yet our channel, it is highly recommended that you should subscribe the channel. And if you have any kind of doubt, I'm just watching your questions also. Meanwhile, you can ask me in the comment section as well. Okay, so when I talk about the most important part of this chapter, you must know that what is a prudential norm. We'll be looking into that elaborately in the classes, in the paid classes, but shortly in an overview manner in this particular lecture also. And these prudential norms were there introduced by the RBI to move towards greater consistency and transparency in the published accounts. Fine, published accounts are those accounts which have been opened by the banks. Fine, already opened by the banks. Now, when we talk about NPA, what is the exact definition? The simplistic definition here we have seen that non-performing and asset, these are the two words from which we have defined the NPA. What does the exact definition of NPA says? Let's see. An asset, including the leased asset, becomes an NPA when it ceases to generate the income for the bank. Fine. Simplistic definition is more or less written here again, because the generation of income of a bank was based on the rate of interest, not the principal. Principal is already with the bank. Fine. They wanted to earn more via rate of interest. But since the asset is not providing that income, that channel of you can say income enhancement of the bank has not been so fruitful as it should be. That is why we are telling that now a particular loan account has turned NPA. When I talk about the various definitions, the technical definitions of NPA based on various types of loan accounts, let's see them one by one. First of all, let's try to define the NPA in case of term loan. So term loan, as you know, that 90 days norm is there normally. NPA, I hope at least this much everybody knows that for the commercial banks, the norm is that if the repayment is not happening in a particular loan account for more than 90 days, then we term a particular loan account as NPA. Simple. But what is the further classification based on the CCOD account, or for that matter bills? Let's see. Term loans, the interest and or the installment of the principal remaining overdue for a period of more than 90 days. No repayment has been credited to the loan account from the borrower's end for more than 90 days in a term loan. Then we will say what? The account has turned NPA. Second, the type of account is overdraft, which is also known as OD account, and cash credit, which is also known as CC. Here, the account remains out of order for a long duration of time, because when we talk about the credit which has to be delivered by the borrower in these types of accounts, CCOD accounts, it is not in a regular manner as it should be in the term loan. Fine. In term loans, mostly we have the EMI concept, but here the credit should be provided within a stipulated time period. That is it. No need to provide on monthly basis according to the usage of that cash credit, or for that matter overdraft. You will be repaying the amount to the bank. Fine. So if it remains out of the order, then again it has become NPA. The third important classification is bills purchased and discounted. So all those bills purchased, the activities which are happening based on the bill. So bill we have seen in the earlier chapters of PPB, that supposingly X and Y enter a particular transaction, that X has provided some goods and services to Y, and Y has promised to pay 100 crore in future, but X wants to have some money. Fine. So it will be providing a bill to Y. Now this bill will serve a benchmark for both of these parties, for X also, for Y also. Both of them can negotiate this bill based on their requirement. What X can do, X can approach the bank, a particular bank, and based on the bill that yes, my repayment will be done within, let's suppose, 2 months, fine, of 100 crore. I want you to give me at least 99 crore, and I will discount 1 crore for you. I am in urgent need of this money. Via this, X can get certain amount of money. If Y is not having any kind of money, but the party Y is willing to pay back to X in real time, what Y can do? Keep this bill and approach its bank, and via that bank channelize the money in the account of X. Okay. So this is how the bill purchase works, as well as the discounting of the bill. So the bill remains overdue for a time period of more than 90 days. Then we will be saying that a particular bill purchased and bill discounted scenario or the mechanism has turned into a NPA. Now, when I talk about the term loans, oh, okay, this is done. When I talk about the various loans pertaining to agriculture, the agri loans, there, when we talk about long term loans. Long-term loans refer to the Kisan credit card mostly, fine, KCC accounts. These accounts are more or less being adjusted on a seasonal basis. Once the cultivation is done and the harvesting has been completed, then the bank will require to have the limit renewed by the customer, not the annual renewal, no, the renewal based on the season. Let's just see what happens in case of agri credit when we talk about the NPA. So two crop seasons for short duration crops, fine. Whenever we say that short term crops we are sowing and we will be reaping the harvest on 6 month basis, so for that two crop seasons will be calculated. For long duration crops, just a single season will be there as the benchmark. So for two crop season for the short duration crop, installment of the principal or the interest thereon remains overdue for two crop season. Fine. For the two crop season, because this was the time period within which the short duration crops will be harvested twice, but still it is not being done. So after the two crop season has passed, we will say that this loan account has become NPA. Next, when I talk about the long duration crop, installment or principal or the interest remains overdue for one crop season. Fine, single season here, it will be termed as NPA. Then securitization transaction undertaken in terms of RBI direction on the securitization of the standard assets. Fine, if we talk about the immovable assets, or for that matter the liquidity facility which has been provided by the banks to a particular customer, if the amount of that liquidity facility remains outstanding for more than 90 days, then also what will happen, the loan account will turn into NPA. For the derivative transactions, although the time period of 90 days is calculated as a standard, but some important aspects are also there beyond the 90 days concept. The overdue receivables representing positive market to market value of a derivative contract, if these remain unpaid for a time period of 90 days from the specified due date for the payment. So always remember, in the derivative transactions, if due date, fine, if the due date has been passed for the past 90 days, supposingly the due date was in February, fine, 1st of February, that the payment of the derivative must be made by 1st of February. But the month of March has passed, fine, March, then April. So 28 days here, 30 here, and you can say 31 and 30 here. So more than 90 days have passed and still no payment of the derivative has been made. So I will say what, this derivative transaction has been since overdue for a longer time, more than 90 days. That is why the particular asset which was being delivered from the bank side has turned non-performing, and we will term the account as NPA. Okay, now what is this out of order status? As we were discussing in CCOD accounts, that if the particular CCOD account is out of order, then we will say that account has been turned NPA. So here out of order means the outstanding balance remains continuously in excess of the sanction limit or the DP, that is drawing power. Always remember, in CCOD limit you will be having some drawing power with beyond which you are not allowed to draw. If you draw beyond this drawing power, you have to take into consideration the banking norms. And when we talk about the overdraft, if it is regularly having some outstanding beyond 90 days, then we would say NPA has occurred. Outstanding balance in the CCOD account is less than the sanctioned limit or the DP, but there are no credits continuously for 90 days, or the outstanding balance in the CCOD account is less than the sanctioned limit or the drawing power, but the credits are not enough to cover the interest debits during the previous 90 days. Supposingly DP was 2 lakh and the borrower has utilized the entire 2 lakh, fine, so it will become what, zero, drawing power will be zero for that time. Now the borrower comes and say that okay, let's just credit rupees 1 lakh here, and the DP now will stand at 1 lakh. But whether this drawing power is equal to the original one, answer is no. And if this happens continuously for 90 days, then we would say account has turned NPA. And this drawing power, although in most of the accounts is calculated annually, but for quarterly basis as well as semi-annually, we have certain mechanism of calculation, and it depends from bank to bank as well as depends upon the type of accounts as well. Okay, so out of order, I hope now you know for sure that what do we mean exactly by the out of order status. Next, when I talk about the income recognition policy, how you will be recognizing a particular income, that yes, the IRAC norms, which are part of prudential norms. So IRAC norms, we were just discussing these. Here IR is what? The income recognition. What is the exact policy for the income recognition? Let's see. So internationally, income is not recognized from an NPA on an accrual basis, but is booked as income only when it is actually received. Fine. So income of the bank will be recognized only when you have already repaid the entire amount. Fine. That is very, very important to know. The basic norms are to be followed for income recognition, starting with the banks should not charge and take to the income account interest on any NPA, including the case of government guaranteed accounts. Fine. So banks cannot charge or take to the income account any kind of interest on the NPA. So if a particular bank account has already turned NPA, the banks cannot just say that whatever additional income I will be having because of the rate of interest not fulfilled here in the NPA account, that particular income is not a part of this income recognition. First point. The interest on the advances against the term deposit, NSC, IVP, Kisan Vikas Patra, life insurance policies are taken to the income account on due date, provided adequate margin is available in the accounts. If the margin is available in those respective accounts, then only you can say that yes, the particular income which is generated has been recognized as the income of the commercial bank. The fees and commissions earned because of the renegotiations, the rescheduling of the outstanding debts should be recognized on accrual basis. Fine. Accrual basis means once a particular transaction has been done, after that you are having some particular right over that income which has been generated over the period of time covered by the renegotiated or rescheduled extension of the credit. So if just in case the NPA account, a particular account has become NPA or is in line to become an NPA account, then banks can intervene via credit monitoring, which we have studied in our unit number 24. Right? So if a particular bank is engaged in credit monitoring, regular credit monitoring is going on, then some repayment schedule tweakings will be there, and the particular account will not be turning into NPA. But the income generated between those activities is not the income of the bank. Okay, it is the income adjusted because you are already going for the NPA provisioning norms. Next is reversal of income. In the case of interest income, it should be reversed or provided for if the same is not realized. So it will be reversed or refunded, you can say. Fees as well as commission. In respect of NPA, the fee or commission plus any other similar income, the charges that have accrued will cease to accrue in the current period and reversed or provided for with respect to the past periods if uncollected. Okay, so it will be reversed. Always remember, which is known as the reversal of income. When I talk about the appropriation of recovery in NPAs, there one interest application is there. So when I talk about the interest application, the banks will be reversing the interest already charged and not collecting by debiting the profit and loss account, that is P&L, and stop further application of the interest as well. However, the banks may continue to record such accrued interest in a memorandum account in their books. So they will be recording that yes, this particular accrued interest has been charged over a particular account. We have not collected it by debiting the P and L account. Still, we are just making a record. We are keeping the record of this accrued interest. That is how the banks function. Reporting of the NPS, the banks are required to furnish a report on NPS on the 31st of March each year after the completion of audit. Fine, that is the timeline. You always remember reporting of NPS, they are done on 31st of March every year. Fine. So this was it for today's class. If you have learned something new, do let us know in the comment section what is the next topic you want the video upon, or if you want to understand in depth the entire unit number 28th of PPB, or for that matter the entire PPB subject plus the other JIIB subjects, then I would highly recommend you to join the JAIIB Mahapack 2.0. Here, not only you will be getting the regular batches, fine. The regular batches are those batches where we are providing the live sessions plus the recordings of those live sessions plus PDF from where we are conducting these sessions. Along with that, we are also providing you the unit-wise tests plus the e-books as well. And when we talk about the doubt resolution system, it works pretty much smoothly because in the live classes, you can ask us n number of times your doubts. So this is the feature of a regular batch. Like right now, we have the latest batch as officers batch. But when I talk about those batches, which will be launched later on at a later stage of our JAB exam preparation, that is the revision batches. Fine. In revision batches, we will be launching two types of batch. One, your crash course. Another one, the power pack revision batch. Both these batches will be clubbed together, fine, in the JAB Mahapack 2.0 along with the all regular batches. Right now we have three regular batches ongoing, and when we talk about the revision batch, it will also be included once they are launched, plus the full length mock test. So if somebody is out there watching this video and thinking that what kind of study material suits your preparation, if you have just begun your preparation for JAB examination, I would highly recommend that start from the regular batches in the JAB Mahapack 2.0, then pick up the concepts using the regular batches and start revising in the fag end of your preparation via the crash course. And just before 10-12 days of the examination, you must enroll in the power pack revision batch and start watching the live classes there as well. One thing is for sure, if you do not pay for different batches, you do not want to pay for different batches, what you can do, directly enroll in the JAB Mahapack 2.0 and you will get access of all the batches for the JAB November 2025 exam cycle, and that too for 2x validity. You are paying for 6 months, but we will give you complimentary 6 months access of the course. If you are paying for 12 months, we will give you complimentary access of 12 months. Fine. So I hope that the course structure is now clear with everybody, and you can enroll in these courses via the coupon code for maximum discounts Y1003. Apply this coupon code and you will get the best offer available on our courses. Fine. So this was it for today's class. We will meet in the next session. Do let me know whatever your doubts are in the comment section. And when we talk about the next unit, unit number 29, we will again target the most important point, or the base will be created. Fine. For the base, use the YT series. For the enhanced version of the YT